Hey guys, Killstokes here. I want to come back and revisit an idea that we looked at in my last two trading edge videos over on YouTube because we are now at the point where things have become interesting. I actually did a video this morning in my live trading room, but I'd rather show you this one since it's going to be a lot more quicker and simpler. But pretty much what we were looking for here was a structure-based CTS trade on the euro dollar where euro dollar had put in what's called an AB equals CD pattern, which is a classic pattern formation. And you can see that classic pattern formation completes right at a previous level of structure. So if I just draw this right back on here, this would be our A up there. This would be our B down here, this middle section that I left out. That would be our C, and then our D completion would be right down here. We combine that with structure and with the RSI for some of you being overextended, and this is the place in which we're looking for signs of a hold and a potential short-term reversal. Now, what we did this morning was we went down to the 4-hour chart, and we actually had a pin bar right here, which ended up not being a pin bar. So you fast forward almost 8 hours later, and we've gotten our doji pin bar right here. So you can see a long test candle to the downside where price action spiked to the downside, but remained within the boundaries of our previous level of structure. And if you're looking for a reason for entry, a good way to enter would be looking for a higher high, higher close candle after this type of rejection candle completes. So what that means is this current candle right now would need to both break and close above the previous candle. So we have already broken above. So what you need next is to close above these highs. Now, although this is a good entry reason, you have more clues here as well. The RSI is massively oversold, as you can see. Before you ever enter a trade, there are three parts of the equation that we need to put together, right? We call this EST. E is going to stand for entries, S is going to stand for stops, and T is going to stand for targets. And these are the three things that we must address before ever entering a trade, because if we don't know the answer to these three questions, we can't set up our risk profile. And if we don't know our risk profile, we probably shouldn't be involved in a trade. So we know our entry already. That will be a higher high, higher close. Our stops, well, this is going to depend on your specific trading plan. I would say this, with anyone, I think your stop should be below this candle. Me personally, the question is by how much. So I personally use an ATR based stop. That's the average true range. So what I'll do is I'll go over and I'll see what the ATR is of my most recent candle, which is this doji pin bar right here. It's going to be 45. I'm going to see what the low of that candle is, 115.29. And I'm going to have to do some math here, and I'm tired and mumbling if you guys can't tell already because I just rushed in. So let's try to do this with our calculator. What did I say? 15. What do we got here? 115. Our low is 115.29. 115.29 minus 45 is going to put us at 114.84. So a 1 ATR stop loss would put us right down here at 1 ATR, or excuse me, 114.84. So we have our entries, higher high, higher close, check. We have our stop loss, wherever that may be for you, check. The last question in our risk profile is going to be, what are our targets? And this is where this trade doesn't look as appetizing for me personally. So when we reviewed this morning, my target area was right in here. We have a few things at this level. We can bring in our Fibonacci retracement from our swing high to our swing low. You're going to see a 50% retracement right there. If we go back up to our daily chart and just bring in our volume profile tool, you're going to see that we have a little bit of a volume spike right here below that 117 even level. So that is why this level stood out for me. Now, the unfortunate part about this level is that if we measure out our risk reward, unfortunately, right, let's say I were to enter at the very minimum 1 pip above that level. If I drag my stop loss down to my stop and I drag this up to my target, you can see that it's not going to be a great risk reward opportunity. So this invalidates the trade for me for now. However, some of our other traders this morning were looking a little bit higher, up closer to this 117.50 level where you see our volume start to expand. So if you are looking for a potential higher level for your target, let's say 117.5 right here, well, all of a sudden you now have a better than a one-to-one risk profile, which may allow you to take the trade. So I think it's always interesting that you can have different traders looking at honestly the exact same signal on a price chart, but because they have different rules for their risk management or just different projections for their targets, it could be a good trade for one and a bad trade for other. So now there's one more thing we can do here. If you can't get involved, originally I was looking for a double bottom. That technically could still happen, but it doesn't look likely just based on my history of price action and reading it. But if we go down to a lower time frame, you're going to see something else here. You're going to see kind of this little loss of momentum pattern, right? So price action comes down, we lose momentum, we have bullish divergence with our RSI. So our RSI, sorry about that, our RSI putting in higher lows, our price chart putting in lower lows. One way you could look to get involved is maybe look for some sort of rotation here where price action maybe, or maybe like a very small head and shoulders pattern. This is a little bit of a reach, but price action comes down here and then retraces back up there. It looked a lot better earlier once when we had this higher high, higher close right there. So we're reaching a little bit, but the point is you can maybe go down to a lower time frame and find an opportunity to get involved as well. Here's a better picture of the head and shoulders. So let's look at this on the 15. You can see price action came down, left shoulder, boom, head, boom, right here, right shoulder. We are working on, we broke and closed above the slanted trend line. Let's see if we did that above the horizontal trend line. We did break and close above both. Yeah, so if price action were to do the thing that I just spoke about, retrace here, this can give you an opportunity to still get involved in that move. And it's going to give you a much better risk profile because, again, wrong way, no longer do your stops need to be all the way below the lows. Your stops can be below that right shoulder, and you can get yourself a pretty decent, where are we at here? Pretty decent risk reward up to this level, looking something like that. 4-to-1 ain't bad. Or if you did want a little bit more protection, can you get underneath there? You may be able to sneak underneath there as well and get a 1-to-1 depending on how far it retraces. Anyway, there are different ways you can attack it, and that's just the point I wanted to make in this video. So just want to follow up on this. One thing I would say, and I don't know how many of you guys heard the podcast yesterday about how the markets, both the Forex market and equities and commodities respond to war. There is the Iran situation that is still happening. That does have an effect on oil, which has an effect on inflation, which has an effect on monetary policy, which has an effect on the US dollar. The safe havenness of the US dollar has an effect as well. So just keep that in mind when you're making any type of trade this week. There are going to be those, I don't even know if we're going to call them fundamental, but there are going to be those outside influence that are going to weigh heavy on the market and can disrupt the technicals. But that's also part of the game. All right. If you have any questions or comments, leave them below. I apologize for being rambly and unprepared, but I literally just ran in and wanted to get this video out to you guys before the candle completed. I'll be more professional next time. Maybe, maybe not. All right. Take care.